If you're looking to buy a home, I'm going to bet that you don't know about some of these loan programs I'm going to talk to you about. It amazes me how many people still think that you have to have a 20% down payment to buy a home. And the reality is you not needed 20% to buy a home in years. So in this video, I'm going to walk you through some of the most important home loan programs that are available to you right now, how you can qualify for them, and how each one can save you a lot of money when you're buying your first home. So let's start with an FHA loan. A lot of people are familiar with an FHA loan. That is a government-backed loan from the Federal Housing Authority, and they are going to have very specific guidelines as far as who can qualify. But the great thing about an FHA loan is you only have to have a 3.5% down payment. So depending on how much of a home you're trying to buy, on a $300,000 house, you're looking at around $10,000, $10,500, something like that. They do have flexible credit requirements. You can be like a 600 credit score and still qualify. They do allow for a little higher debt to income ratio than a lot of the loan programs, and it's great for buyers who don't have perfect credit or who don't have a huge down payment. So this type of loan is best for a first-time buyer who needs flexibility with credit, debt, and cash on hand. Now, the second type of loan program you probably have heard about is a conventional loan program. If you've got a high credit score, then a conventional loan will probably save you more money in the long run. It works best for credit scores that are 680 or above, and even better if you're a 720 or higher. They do have lower mortgage insurance rates compared to FHA loans. And you can even remove that private mortgage insurance once you reach 80% loan to value, meaning you have paid 20% off on your loan balance. So these types of loans are better for buyers who have strong credit scores, who want more long-term control, and lower monthly payments along the way. The next type of loan is a VA loan. This is a very specific loan for our veterans and active duty military. So they can finance a home with a 0 down payment. There is no private mortgage insurance, and sometimes their interest rates are going to be a little bit lower than the other loan types. You can use a VA loan more than one time. It's not just for your first home. But the only people who can use those are veterans, active duty military, and some reservists. The next type of loan you may or may not have heard of is a USDA loan. So we call it the USDA Rural Development Loan. And again, this loan requires a 0 down payment. Most of the time, if you live within the city limits, you're not going to qualify for a rural development loan here in Hamlin County. Some of the homes in the county will not qualify for rural development anymore because of the buildup in the areas around those neighborhoods. But if you live in one of the neighboring counties, Jefferson County, Cocke, Grainger, Hawkins, all those counties are 100% eligible for a rural development loan. It doesn't really matter where the house is inside those counties. Now, they do have income limits on a rural development loan. If you make more money than the average Joe for your county, you may not qualify, but you will have an affordable monthly payment and competitive rates on those. So this is one of the loans that I think a lot of people don't realize is out there, is the rural development loan. Now, we're also going to talk a little bit about some of the local and first-time buyer assistance programs. This is where you can stack your benefits, so to speak. So Tennessee Housing Development Agency, we call it THDA. You can use a THDA loan in conjunction with an FHA, and the THDA subsidy basically will cover your down payment for FHA. So they'll give you that 3.5%, and they'll give you an additional 1.5% that you would be able to use towards your closing cost. So it really minimizes the amount of money out of pocket that you have to spend to buy a house. But you do have to be a first-time home buyer. A lot of people have the misconception that if they've ever owned a home in their life, they are no longer a first-time home buyer. But the actual requirement is you cannot have owned a house in the past 3 years. So if you owned a home several years ago and then maybe you got divorced and you had to move into an apartment or you rented a house, as long as you were no longer on the deed to the previous house, you could be considered a first-time home buyer again. So there's a lot of different things you can do with these loan types to help minimize the amount of money out of pocket that you have to pay to get into a house. So if you didn't think it was possible to buy a home without a huge down payment, I hope you found value in this video. Let me know in the comments, what type of loan program did you use when you bought your first home, and do you recommend it to someone else?